Hope y'all are doing well. It is Power in Numbers live for May 28th. So welcome. This is what we do at the end of every single month where we are here and we can talk about more current things that are impacting you as business owners. So this is fully live. We go through news, to-dos, and cues. So we're going to talk about news impacting small business. We're going to talk about to-dos, what you should be doing right now as a small business owner, right? We're at the end of May. What does that mean you should be doing related to small business finance? And then we're going to take some questions at the end. So hi, wherever you're watching me from. Actually, you're only watching me from YouTube right now because for whatever reason, my Facebook feed is not connecting. So I am not over on Facebook right now. We will share this into Facebook so that you guys can see it later, hopefully, and see the replay. So I'm sorry if you're watching over on Facebook, I'm unable to get connected. So if my team can just let anybody who's over there watching on Facebook to get them to come on over to this YouTube chat and put this link in the event, that would be great. Okay. I hope everybody is doing well today. And I have some really exciting topics. I'm jazzed to be here today. But before we get started, of course, I have to start by recognizing our sponsor. So every month we have a sponsor for Power in Numbers Live. We really appreciate these sponsorship opportunities. And today it is Xero. So I've been talking about Xero a decent amount because a lot of you know that I've been trying out Xero. It is an alternative to QuickBooks Online. So you guys ask me over and over again, hey, what alternatives, do you like? People, maybe you tried QuickBooks, you didn't love it, or you're just looking for something a little bit different, or you're seeing more and more price hikes, which continue to happen with QuickBooks. I just got another email this week, so I feel you on price hikes for QuickBooks. So Xero is a fabulous option, and I actually have been using it since January. I moved my real books into Xero. I'm still using QuickBooks too, because I like to be able to compare. But I moved them into it and I have loved it so far. I've been really impressed. I was not expecting to be as impressed as I have been. And I really have enjoyed working in Xero. It just seems a lot more, interestingly enough, intuitive than QuickBooks, easier to learn for an end user. You don't have to be an accountant to know how to use it. So I've really been enjoying it. And not only that, I actually have a special deal, y'all. So I want you to know about this. I don't know. I do not know how long this deal will be around. I know we can offer it until at least May 31st, but Xero has agreed to give my audience 100% off for 6 months. That's free. That's free for 6 months. If you want to try Xero and you want to see if you like it, you can actually keep running your QuickBooks if you're using QuickBooks, or you can kind of run both of them and see which one you like and compare and contrast, right? You can do that now for 100% off for free. Okay, so again, I don't know how long this is going to be. This is just with using my link, and it's actually a special link. So that link, my team will put it on right now. It's jamietrull.com/Xero deal. That's where you're going to want to go and be able to grab that special deal. So I'll put that up on the screen in just a minute. But that is the special Xero deal that we have going on right now. So thank you to Xero for that, because I've never seen an accounting software deal that good before. I'm not kidding. If you've been thinking about, changing, trying it out, and you're wondering if, this is the time to do it, right? Then this is a great time, because honestly, you can try it out for free. So let me put that up real quickly for you. Oh, here it is. Here we go. So for a limited time, here it is, Xero for free. Just go to the Xero deal. That's a special limited time link that we have right now. So depending on when you're watching this, it may not be live anymore. I'm going to try to keep it as long as I possibly can, because I think this is a fabulous deal for our audience. Anyway, thank you, Xero, for sponsoring today's Power in Numbers Live. Okay, so now it's time for us to go over to our fun little transition slides. Okay, so we're going to start with the news section today. And man, there is some news, y'all. This is where I like to talk about topical things that are affecting small business owners. And a lot of it is going to be legislation changes. So right now, That's what's going on. You may have been kind of hearing about what's happening out there. Maybe you've heard of the one big beautiful bill, which is literally the name of the bill, y'all. Like, I thought that was just like a nickname. That is actually in the bill as I was reading it. So this one big beautiful bill, it has been passed very narrowly by the House, which means it's up for debate in the Senate. They're hoping to be able to have a vote on that by the 4th of July. So we're a little over a month. We have no idea what's going to happen in that amount of time. It could change quite a bit if it gets passed, or maybe it stalls out. Who knows? There's just so many different options here, but I still think it's important to talk about what's in it. And I'm not going to, there's a lot in it because it is apparently one big, beautiful bill, depending on who you are, whether you agree with that, but it's got a lot. I mean, this is a budget bill that they're trying to put a ton of stuff in, including some tax changes and some extensions of our current tax environment as well. So I want to just be clear on, I'm not going to talk about all the things. There is a lot going on in this bill. I do encourage you to go and read reputable sources and form your own opinions, right? As with anything, I think that there's good things in here. I think that there's not so great things in here. It all just depends on your perspective, but I'm going to speak to my small business audience because that's who I speak to. So how does this affect you? A lot of ways. There's a lot of things in this bill that could affect you. So a lot of them actually are on the positive, I'd say, side when you're talking about small business taxes. So for example, well, you guys knew that the Tax Cuts and Jobs Act, that was Trump's first tax act that was passed in 2018. Okay. So the Tax Cuts and Jobs Act has been in, kind of the law of the land since then. Our tax code has been essentially based off of that. However, a lot of those tax cuts, including tax cuts to income tax rates, also, the corporate tax rate, our qualified business income deduction that was added based on the Tax Cuts and Jobs Act, that's that 20%, business income deduction that helps you reduce your taxes if you're a patent entity. All of that is scheduled to expire at the end of this year, or the vast majority of it. And so that's where kind of the issue is coming into play, where they do need to pass something potentially, because otherwise we're going to run into a bit of a tax cliff. And I do not love tax cliffs. I also don't love the uncertainty of this. I really wish that they would just pass, as a CPA, this is kind of like putting my CPA hat on, the uncertainty that comes with, tax planning. I mean, we are in 2025 and we still have no idea like what's going to be in effect at the end of this year, right? And that makes it really hard for planning into multiple years. As a business owner, we want to have some line of sight as to like what we should be doing. And I am a big in all of this, and I talked about this a little bit when we talked about tariffs. Uncertainty is the enemy of business, right? Uncertainty is not good for business. And so when we're in this, what's going to happen? We don't know. We're arguing over things, right? It just means we're all kind of collectively like holding our breath and waiting. And that's not good for economic development. That's not good for small business. That's not good for decision making. That's not good for investments, right? So that's kind of my biggest issue right now, among other things. But, related to this topic is, without any kind of clarity, we're still kind of sitting in the dark, and it makes it hard to make decisions. So with these kind of tax cliffs, the way these bills are set up, we can't really plan much more than like 5 years into the future, right? And then, now we're sitting here and we can't even plan 1 to 2 years into the future because we don't know what the tax situation is going to look like. And I just really don't think that that's good for anybody. So I would love to see if they make changes, stop having these cliffs where the changes are just for the next 3 to 4 years. And then we got to go through this whole rigmarole again. Just make the changes, let us adapt to them. And then if we need to make further changes in the future, have more legislation to do that. But these cliffs are really a problem. And we just end up in this like maddening cycle of like, will they, won't they? What's going to happen? Let's analyze all the potential, things that could happen. And it just feels like, a waste of time and energy. So my hope is, if they do move forward and make some of these tax cuts permanent, that they do make them permanent and not like for the next 3 to 4 years, right? Let's just get some consistency so that we can know how to plan. And that helps us as, service providers, right, to help our clients and our customers navigate this uncertainty. So that's my hope, but a lot of this will. So the qualified business income deduction, for example, that's 20% of a deduction that you get. It's a very complicated deduction. I gotta be honest. It's not my favorite deduction in terms of how it is calculated, and the Tax Cuts and Jobs Act talked a lot about trying to make things simpler, and that certainly is not simpler in any way, shape or form. And in fact, it has a lot of different things that affect small business. So for example, right, the qualified business income deduction, it may change depending on what type of entity you are. So if you're an LLC who is being taxed as a sole proprietor, your taxes are going to be one way. If you are a LLC taxed as an S Corp, it's going to be another way. If you're C Corp, it's going to be completely different. So what happens is it can change the equation, right? I talk a lot about when is it the right time to become an S Corp. Well, I'm waiting for what happens with this bill because that completely could change the calculation, right? So some people who may have become S Corps maybe wouldn't be, better off as them. Some people who, haven't been an S Corp, it might actually be better for them depending on what happens, right? So there's a lot tied up in this that isn't really being discussed much out there, right? In kind of like this nuanced level. So those are just things to be aware of, that it can impact, does it make sense for me to continue to be this entity type, under this new tax law? And I think that's another reason that we need some, certainty here. And we're never going to have full certainty, but like, again, we need to get rid of this uncertainty because we don't want to be in a situation where we're having to look, and just switch back and forth in terms of what entity we are. And you can't even do that in a lot of instances. S Corp, you once you revoke it, you have to wait a period of time before you can elect it again. So it's really hard when people are trying to make the best tax decisions for themselves. The landscape is changing and uncertain. How are we supposed to move forward? So that is one thing, though. Those tax cuts would become permanent under the new tax law, and the QBI deduction would go from how it's currently written from 20% up to 23%. So it'd actually be a little bit higher than it is right now, which would be a net positive for most small business owners from a tax perspective. So that's just something to know. And that's a big part of, what's kind of being talked about. But there's a lot more in this bill. If you want to read more about it, there's a article here about this one big, beautiful bill passing the House and what it is doing. There's also more in there too around R&D, so research and development, being able to fully expense research and development in the current year for small businesses. So that is something that I think is actually a positive thing. We want to be spurring people investing. But again, let's stop with these like short term. Let's try to make it, longer term such that we can have some certainty going forward. So those are my high level thoughts on that. But you can check out more about it in this article about the bill going through Congress. I'm just going to go ahead and put this up. Oh, here we go. So here's the link to go grab that and go check that out. Okay. So the next thing that we're going to talk about actually is in there. Another thing that's in this big, beautiful bill. And y'all who've been around a while, I have thoughts on this. The employee retention tax credit, okay? The employee retention tax credit is a tax credit that that was a COVID era credit that you guys know I've done a ton of content on YouTube. So this was one that you could get a tax credit back for paying your employees during COVID. It's incredibly, I talk about QBI being complicated. It is incredibly complicated to explain how the ERTC is calculated. I had a calculator for it and everything. It was, to help people out. But because of how complicated it was, there were a lot of bad actors that came out. And I was personally affected by some of this. So I'm very well versed in some of the ERTC promoters is what they're actually called in this bill. So this bill does a couple of things. It actually goes after these ERTC promoters. They tried to actually pass this another time too, where it would increase the statute of limitations, meaning instead of 3 years to audit ERTC claims, they now get 6 if this passes. And also the fines for those ERTC promoters who knowingly, right, if they're knowingly charging you contingent fees, which I warned about this whole time, don't pay a percentage fee for your ERTC credit. It is unethical, potentially illegal, right? But it ultimately makes it such that oftentimes these ERC promoters were telling people that they qualified, that they didn't, or they were telling them they qualified for more than they did, right? And that was all in an attempt to make more contingent fees off of those. And so that's who the IRS wants to go after, or this bill says this, right? Also, this bill would make it such that if you claimed ERC after, I believe it's January, I think it's like January 24th. It's a random day in January of last year. Maybe it's the end of January of 2024. If you claimed ERC after that, you probably haven't gotten it yet because it's very, very, very backlogged. But if you claimed it after that it wouldn't count. They would effectively be shutting it down, which again made sense when they were trying to pass something like this a year ago, right? But now people have been, trying to claim this. Essentially, it's over now. Essentially, you had to have claimed it for 2021 by the time taxes were due for 2025. So that'd be April 15th. So ultimately now that tax deadline is over, but they're trying to even go back and backdate it such that they don't have to pay out any of those claims. And part of this is because their assumption is that most of the people claiming that late in the game were through ERC promoters, where maybe there's more fraud, involved in that, which is probably true, right? But then, people who maybe just heard late or maybe waited on it for too long and finally decided to do it, right? It would hurt those businesses who wouldn't be able to claim it. And they may have even paid for services to help them figure it out and file it, and then they don't end up getting their credit. So I don't think that that's necessarily fair. I'm curious to see what this ends up with in the final bill. Personally, I think they should just, at this point, cut their losses and say, we're going to pay them out, and then we're going to audit on the back end and try to figure out who these big ERC promoters were and really go heavily after them. And it was interesting, the fines in there for ERC promoters, if they find that you were somebody who was, making a significant amount of revenue off of this, and that you were intentionally, and that's going to be the tough thing to prove, I think, that you were intentionally or not having due diligence around it, aiding people in understating their tax liabilities, right, and overstating these credits, that you would have to pay a minimum of, I think it was $200,000 or the higher of $200,000 or 75% of the total revenue you made from your ERC promotion, which is a lot. So that's going to hit some of these kind of more questionable companies. Now, honestly, most of them have disbanded and run for the hills at this point in time. They're not just sitting around waiting for the IRS to come audit them. So good luck, IRS, on that. The other thought I have, so Andy says you can't go back and audit them if Doge has fired a lot of the employees. And let me take it one step further. So this is true, right? So, IRS, we have less people for enforcement. So now they are increasing it from 3 years to 6 years. That might be why, right? Less people, they need longer period of time to go and enforce this. But also, I will add that Billy Long is I talked about this in a previous Power Numbers Live. Billy Long is who they have nominated, who the Trump administration has nominated to become the IRS commissioner. He has not been confirmed yet. This has been a long time that they, have not confirmed him. And one of the biggest things that he's being criticized for is he basically was an ERC promoter, y'all. He essentially told everybody that they qualified for ERC and made a lot of money off of ERC credits. So I'm in my mind thinking, how does this work where the IRS is going to be in charge of doing, of going after these ERC promoters under this bill and going after them for fraud and all of this. And meanwhile, like, how does this work if the incoming, potentially, if he is actually confirmed, IRS commissioner would potentially be in this bucket of an ERC promoter in this bill? So I have a feeling that in the final bill, this changes. I don't know. It's just, it's really interesting to me to see what plays out in real time. I'm imagining that behind the scenes, Billy Long is very much lobbying to try to get this out of the bill. So I am curious to see, how this ends up changing over time. Anywho, I always just find the whole thing crazy. That there was as much fraud as there was, and we're probably going to see very little of that actually be resolved, and very little people actually get in trouble for this stuff, unfortunately. That's kind of how it goes, and it just means that the end consumer tends to be, in this case, the small businesses that worked in good faith with these companies end up being the ones that, kind of get hosed at the end of the day, especially if they're getting audited, and that company that helped them with the credit and took a bunch of the money ran for the hills, right? Like, they're gone. You're not going to be able to get any. If the IRS comes back and says, actually, you didn't deserve this credit, and they claw it back, guess what? You're kind of out of luck. You're not going to be able to get that money back from that promoter. Those companies, go check the website. It's probably shut down already. So that's kind of how these fly by the seat of their pants, opportunistic, we'll say, industries tend to be. All right. So just some thoughts on that. Okay. Last thing I wanted to talk about too, that it's in the bill now. It wasn't originally, but it is now, this no tax on tips and no tax on overtime. I think this is actually interesting, and it's very bipartisan. The no tax on tips, interestingly enough, before even the bill came out of the House, the Senate actually passed a unanimous bill for no tax on tips themselves. So now it is in this big, beautiful bill. Who knows if that's what ends up getting passed, but it does look like there's at least bipartisan support for no tax on tips. Real quick though, just because I want to clarify, because it's being called the no tax on tips bill, it means no income tax. There is still Social Security and Medicare taxes, payroll taxes on tips. So that's just something I want to make sure people are aware of when they are, thinking about this. It is no income tax on tips. And the way it would work is, if you are in an industry, and this is, I think, an important clarification. First of all, it doesn't apply to high income earners. So I think they define that as $160,000 or more. It's not going to apply to those people. But if you make less than that, then if you're in an industry where tips are usual, right? So like, I can see some of us, because I do believe it looks like this will apply to some, if you're more on the self-employed side, like an independent contractor, an independent, hairstylist that works for yourself, and part of your money is tips, right? That makes sense, where those tips would be not allowable. But if you're in other industries, you might think like, well, I'm a marketing, I have my own marketing agency, so maybe I'll just try to like take more of my money in tips and less in, in my regular fee, and try to like move things around. That's going to be tougher for you to do, because it does have to be an industry where tips are generally kind of normalized, right? So that's going to be hospitality, like that kind of thing. Like I said, hairdressers, barbers, those types of service-based businesses. But typically any kind of business that has tips as a normal thing is what's going to be scoped in here. And essentially it does come through in your income, but then you're going to be able to deduct it. And it doesn't matter if you itemize. So this works for people who don't itemize too, which is most people. And you're going to be able to deduct those tips from what you have to pay taxes on. So I think that's really interesting. And, but as an employer, it probably doesn't change much, because you're still having to pay those payroll taxes on it. It just means that your employee won't have income taxes on it. Stacy says, I don't know how I feel about no tax on tips. Income is income, and why does the waitress get preferential treatment over the school custodian? I think that's really interesting, and here's my other take on this. I also think it encourages, like, we're already in a bit of a like tipping frenzy here in the US, like, where I do feel like a lot of the cost of labor is having to be subsidized by the consumer, which I don't love in all cases. Like, I think it can make some sense, but I think it gets overdone. And part of that is, right, like still the law of the land. If you are a worker, I worked in a restaurant for a long time. I did that was like my summer jobs, high school, college. I did a lot of food service work, which, Lord help me, I would rather do anything else. I was a terrible server. I have so much respect for people who do that because I was so bad at it, and it is very difficult. And but anyway, I actually worked at Ruby Tuesday in the mall for one of my jobs. I have stories, y'all. I have some stories. Like, just give me a glass of wine, I'll tell you someday. But when I worked there, I even remember, I got paid $2.13 an hour. That's still the minimum wage for a food service worker. It hasn't changed since 1991, y'all. $2.13, right? Which means they're relying on tips to make up the rest of that money. And let me tell you, when you work at Ruby Tuesday in the mall, you know how many tips you get when grandma comes in to have the salad bar for lunch and leaves you 50 cents? Like, that's I did not make a lot. And I do remember even my manager at Ruby Tuesday at the time, it was kind of like, if you got cash tips, right, they would tell you, like, don't claim all your tips. Like, it was very much, now everything's credit card, so it's probably a little different. But at the time, they would be like, haircut it. So, if you made $50 in tips, which I never did at Ruby Tuesday, let's be honest. If you made $30 in tips, like, I might claim 10. Don't come at me, IRS. Now as a CPA, I kind of cringe at it a little bit. But that was the way it went. And I do feel like we're in this tipping world where, it really is requiring consumers to continue to subsidize the workforce, which I don't know if that's a great thing. And I feel like this might take it even more that way where, people are going to want even more of their compensation in tips. And as an employer, great. Like, if I were in a service-based business, I would love that. But as a consumer who goes and buys things and goes to restaurants and does all of these things, I don't know that that's necessarily fair, right? And so I think we're going to continue to have this world of everybody asking for a tip, right? You go to get a to-go order and it's your minimum tip is $8 for your to-go order. I don't know what to do about that. But yeah, I do agree. I think it's interesting, and there's some preferential treatment. Like, why are we subsidizing and allowing some people to have a higher proportion of their income not taxed versus others? I don't know. So anyway, I think it's an interesting thing, but I do see that being something that does come down the pipe, along with, I do think the overtime exemptions are likely as well, where there won't be income taxes on overtime, which again, you have to be eligible for overtime. And so I think there's a little bit of also wait a second, what about all these people who are exempt from overtime? Why, they don't get that benefit, even though they're working, X amount of hours. But, and that wouldn't apply obviously to self-employed people because we aren't eligible for overtime, unfortunately, even though most of us work a lot of overtime. Okay. All right. So that's the news portion today. Also, let's see, if you want to read more about that no tax on tips bill specifically, again, there's that. And then there's also no tax on tips, which is now in that one big, beautiful bill. We'll see what ends up getting passed at the end of the day, but I do think something will materialize given that it has bipartisan support. Okay. Let's see. So now we're going to go on over to the to-dos section. What should we be doing? It's the end of May. What should we be doing related to business finances, deadlines, all the things? So y'all know I got to talk about it. It's coming up June 15th. Estimated taxes are due for Q2. So if you are self-employed, if you are a small business owner, you likely have estimated taxes that you should be paying. If you don't know much about that, or you're trying to remember how to pay them, right? This is so you don't end up getting fines and penalties by waiting until April 15th of next year to pay in on your taxes, right? So I have a video that is on YouTube right now where you can go and you can actually watch me step by step go through and do actually pay my estimated taxes. So you can go find that. My team will put that up here in just a minute. And then the other thing I wanted to mention too, though, what I've started doing even more, because I am an S Corp, if you have an S Corporation, here you go. If you have an S Corporation, then I would recommend that you actually just withhold even more in your paycheck. So just go into your W-4 and adjust your withholdings and kind of calculate out how much more you need to withhold from your paycheck. That's what I do. So I don't pay estimated taxes anymore because I just pay them through my paycheck. I will say, sadly, most of my paycheck ends up, being gone by the time I put money into my 401k and, I withhold my extra estimated taxes. But that works out really well for me. So if you don't want to have to deal with that, that is an option if you are paying yourself via payroll as well because you own a corporation. But here is how to pay estimated quarterly taxes if you're unsure. Okay, so another thing to be thinking about right now is I actually think I talk a lot about switching systems and different times to switch systems. So I typically love a January 1st system switch because I just think it's the easiest thing to do. So in Q1, if you're wanting to switch accounting systems, payroll systems, banking systems, I think kind of that January 1 split is a great time to do it. But I also think mid-year is a great time. So if you're like, man, I don't want to, I feel like I'm stuck with QuickBooks for the rest of the year or whatever it is, right? Now is actually a good time to be looking at your systems and maybe doing like a July 1st switch, right? So you could sign up now, get things set up, and then have the switch over as of the 1st of July. That's also good for payroll switches too, which I may be doing, hint, hint. I might be trying out a new payroll system and switching over in July, but I will be doing that as of July 1st because of the fact that then I have my first 2 quarters handled by one system and then the second 2 and the rest of the year handled by the other. So it is a good time to be thinking about that if you don't want to get stuck for a whole nother year with the system that you're just not loving. So again, good time to go ahead and to talk about Xero, who is our sponsor for today. And they have the most amazing deal I've ever seen in accounting software. So if you are thinking about trying a new software and you want to essentially be able to try it out without any, strings attached, just give it a try and see if you like it, free for 6 months. Now is the time to do it. Now, make sure you use it, right? Like what I don't want is for people to sign up and then they forget to use it and then they're scrambling later on. Get in there, start playing around with it, see if you like it. I have a video as well on how to transition from Xero, from QuickBooks to Xero, if that's what you choose to do, or you could use it, really, it applies even if you're just setting Xero up for the first time or you're moving from another system. But you can go check that out. That's on YouTube as well, where you can watch how I actually step-by-step made the switch and got it all set up in under 40 minutes. So definitely go check that out. It really isn't as hard as you might think that it is. And it's a good time. Let's play around with it. It's summer, like it's a good time to play around with something new. And the last thing on the to-dos list before I move on to your questions is if you have not yet, I would love for you to pre-order my new book, Hidden Profit. Oh, I normally have it. Here it is. This is the advanced reader copy of Hidden Profit, my book, which is all about finding hidden profit that already exists in your business. It's a book that helps you really understand finances in a way that makes sense, with a little bit of pop culture reference in here as well. And that I'm really excited to be putting out into the world. It's being published by Simon Acumen of Simon & Schuster in October, but you can pre-order now, and pre-orders really, really help new authors. So please pre-order. You can also, if you pre-order, you have the opportunity to come join the book launch group, which I would love to have you in there. So here is, if you're interested in it and you pre-order, you can go join our book launch group. It is starting up June 1st. There's going to be fun giveaways. We're going to have some extra bonuses in there, things that you get to do and be a part of this great community that's just getting really excited about this new book coming out. So I'd love to have you. If you're interested, just go check that out at jamietrull.com/book launch. So more to come. We're still, gosh, it's crazy that we're still like just under 5 months from when this actually comes out in the world. I cannot wait. I feel like it's taking forever. This has been like a 3-year process, but I am really excited to finally get it in y'all's hands soon. Yay. Okay. And next. All right. We're on to the Q section. So if you have questions as well, feel free to drop them in the chat if you're watching here. We do take questions. So if you want to submit your questions, oh, thank you, Stacy. You're the best. I love it. Yay. You rock. Gold star. I love hearing when you guys, if you do pre-order, tag me on Facebook, tell me about it. Like, I'd love to hear that. DM me, whatever. I get really excited that it's starting to feel more real, that people are going to have this book and be reading it. And it is no joke. Like, the publishing industry in general and writing an entire book sounds easy, but it was quite a lot to bite off. I'm not sure, had I known the full extent of it, I'm not sure I would have gone for it and done it, but I'm glad that I did. If you do need to want to submit a question for a Power in Numbers Live in the future, you can go check it out and join. You'll join the newsletter, and then you can go ahead and submit your questions. So if you're watching on YouTube, you're going to go to jamietrull.com/YouTube, and that's where you can do that. And you can submit questions for this segment of Power in Numbers Live. I'm going to go down. I have a couple had questions. I ended up actually combining some questions that are frequently asked questions that we've been getting a lot based on a couple of topics we've been talking about a lot on YouTube. So I'm going to put those up right now. And the first one is, how is it legal? This is, I've been doing a lot of content, if you've been watching, on hiring your kids. In fact, my son was helping me format a presentation just yesterday, which I hate working on slide decks. Actually, it wasn't yesterday, it was Monday. And it was the most amazing thing. He's 11 and he just like crushed it. He did it faster than I even could. And he was like, I'm amazed. But the question is, how is it legal to hire minor kids under the age of 14? Doesn't that violate child labor laws? I get that comment on pretty much all, if I have posts about hiring your kids or anything like that, this is the comment that I get, isn't that illegal? And the answer is not necessarily. And I know this sounds strange. So first of all, I'm going to say here, I am not in the camp of like exploiting your kids. Like, that is not what I talk about. That is not what I teach. It's not about exploiting cheap labor. In fact, most of the time, the people who take my programs are trying to figure out how they can justify paying their kids more because it gets a better tax break. They can put more in their kids' Roth IRA, all kinds of things. So this is not about exploiting cheap labor at all. And it's not about putting kids, the child labor laws that always apply are the ones around making sure that it's not in a hazardous type of employ. So you can't employ your kids in something that is dangerous, y'all. I know it shouldn't need to be said, but apparently it does, right? It has to be age appropriate. The laws around the times, like the amount of hours that they can work and when they can work, like if it's during the school year, they shouldn't be working when they're supposed to be in school, that type of thing. All of that always applies. The thing, however, that if you own a business, right, you have kind of preferential treatment for is employing your kids under the normal minimum age, which is 14 federally. So there is a specific exemption in the FLSA, which is the Federal Labor Standards Act, that says if you are working for a company that is wholly owned by the parents, there is not a minimum age. The minimum age requirements are waived. Now, I talk a lot about what this actually means. What does it mean to be a business wholly owned by parents, one or both parents, right? It doesn't apply to corporations. Even if your tax is an S Corp, it's not going to apply to you. Doesn't mean there isn't a way to do it. But it is, it really varies based on your situation. So there are things you want to keep in mind before you do this, okay? But it is legal federally. States, again, are a whole nother topic to come into, because states, most of them follow the federal exemptions. Some states are a little bit more stringent. We talk about that more in my free masterclass. So I just did a free masterclass recently, and now we just put the encore up. So for a limited time, you're going to be able to watch the encore of that masterclass. And that's where I go into a lot more detail about this, where I talk about why it's legal. We talk about federally, states, we talk about if you're a corporation, what can you do? Because there are ways that you can also do it as well. But I love hiring your kids. It's a great tax strategy for shifting income, but it's also great for setting your kids up for success. So both my kids have Roth IRAs, and they're 8 and 11 years old, and they are both learning really amazing skills that are going to benefit them in life. So definitely make sure to check out that masterclass. So if we can put that up real quick. Oh, here we go. Here we go. So here's the link for that free masterclass. So go check that out when you have a chance. All right, let's see. So the last question I wanted to talk about actually related to our sponsor. So whenever we have a sponsor, I like to pick the questions that we have been getting that relate to that sponsor where I can. So the next question is, does Xero allow for sub-accounts the way that QuickBooks Online does? So if you're looking at Xero, I've gotten this question, I think this last week, via comments on YouTube and emails to support and things like that, probably 5 times in different ways. So Xero is different. QuickBooks, in terms of sub-accounts, meaning you can set up, marketing and advertising, and then have like 5 different marketing and advertising accounts underneath it that you can then collapse, and it'll subtotal for you. So that's kind of how QuickBooks looks at sub-accounts, right? You have a parent-child relationship accounts. Xero doesn't do that, but that doesn't mean that it's more limited. In fact, I actually find it to be a little bit more flexible the way that Xero does it. So you don't have necessarily sub-accounts. However, you can kind of do that a little bit with the if you want it to be, ordered in a certain way. I typically do that with the numbering, right? So I might have like account, 101, and then there's account, 102, and have them all kind of in the same sequence. And then I also, what you can do, I have a whole video on tracking categories, which is a little bit of a different topic than what we're talking about here. So tracking categories are great. They're kind of more to be used if you use like QuickBooks classes. That's kind of what they're similar to, where, if you want to track set locations, the income and expenses related to specific locations, or divisions in your business, things like that. If you want to track anything like that separately, that's what tracking categories are in Xero. And I really like them. You can have up to 2 tracking categories, which doesn't seem like a lot, but remember, that's the overall category. So category is location, and then you can have up to 100 different locations underneath that. Or if your category is division, you can have up to 100 different divisions. So that's kind of how tracking categories works. But that's obviously different than this like sub-account situation, right? So in some cases, if you were using sub-accounts for tracking various different locations or divisions, you might want to use tracking categories instead, right? But if you were using sub-accounts because you want to be able to subtotal certain parts of your P&L or something like that, then what you can actually do is you can edit the layout of your reports. And I love how editable it is in Xero. So there's a way you can pull up your P&L and then just press edit layout. And you can summarize it however you want and save it such that the next time you pull a P&L, it's going to show it the way you want to see it. So if you want to see those kind of 5 accounts grouped together and subtotaled, you can just go and select that, and you can change things around and see it however you want to see it. So that's kind of how they do it, where it's not this very rigid parent-child, but you can actually run various different layouts however you want to and save those layouts such that you can kind of view it and subtotal things in multiple different ways, right? And I think that is really neat. So I've been playing around a little bit with that, and I've really enjoyed that. So it's just a different kind of way to think about it from sub-accounts. So sub-accounts is just a very like parent sub, okay, I get that. But in Xero, it's a lot more customizable, and you can change it, right? So like it's kind of hard to change it if you've set up sub-accounts. In Xero, if you want to see your report one way, and then the next week you're like, you know what, I want to see this a different way, all you have to do is edit the layout. So you have the ability to see it however you want to see it. And I think that that's really neat. So that was something that I really, really enjoyed kind of as I've been getting to know Xero over this time. I just think that that's great. So some people thought that that's a limitation, that they don't have sub accounts. I see it very differently. It's just you go about it a little bit of a different way. So that's with any of these kind of changeovers, right? In software, we may be used to something and we're looking for the same thing over here. But if we kind of open our mind a little bit, there might be a different way that can accomplish a similar thing, right? We just might have to look at it a little bit of a different way. So I'm trying to do more content on things like that to get you guys thinking about how you might want to structure out, if you decide to move to Xero, for example, how you might want to look at your financials. I think it's really fun to move to a system too, because it gives you the ability to really, I redid everything. So I've had my QuickBooks for a really long time. I've been a QuickBooks user forever. I've recommended QuickBooks forever. And when I moved into Xero, I just thought, you know what, I'm going to revamp how I'm looking at my financials, and I'm going to set it up the way that I, really want to see things. And I'm going to set up my automations. It was just nice to have kind of a little bit of a clean slate there to be able to set things up how I want. So like I said, really excited for this new Xero deal. Free for 6 months, 100% off for 6 full months, but only with my partner link. This is my special deal just for my audience. So go check it out, jamietrull.com/Xero deal. I have no idea how long it's going to be offered. I know we have permission to offer it through May 31st, hopefully past that, but we will see. So definitely make sure to go check that out if you're interested. And I have lots of content on Xero as well over on this YouTube channel where you're watching this. So you can go check out more about it if you want to know. Thanks, everybody. And I'm so glad you were here, and I'll see you soon. Bye.